Six consecutive days of uptrend in Nifty and Bank Nifty. Nifty at an all-time high of 13,760. Bank Nifty at 30,714. Well, still to cross the all-time high, still to cross 32,613. Will it cross? Will it not cross? Let's have a look at weekend review. Welcome to the weekend review of Nifty and Bank Nifty. For disclaimer, please refer to my website www.chartvideo.com/disclaimer. On Wednesday, the 16th of December, Nifty made a fresh breakout as it moved above the particular 13,600 zone. So after the breakout, we did have a pullback on Friday, but at close, it recovered to close almost at the high, and 13,760 was the official close. By all means, 13,600 would be the point to watch out for any reversal. You may say breadth is bad, you may say this P is high, you may say whatever language you feel like, but market is in its own way on the upside. Till we get a reversal signal, we should not trade on the short side. And mind it, 13,600 is not the level of intermediate term downtrend signaling. The intermediate term downtrend will be signaled only if we get a close below 13,400, and that's quite well off. So as far as support resistances are considered, on the lower side, we will be on a watch out at 13,600 followed by lower level of 13,400. On the higher side, the round numbers, the Fibonacci ratios, those might act as resistance. Well, those always are temporary in nature. Temporary in nature till market feels that yes, it will be a long term. Let's see the indicators, what they are indicating. The RSI as of now has moved to a lofted level of 81. One more interesting thing to watch out from RSI would be the break below the 75 level here. At this particular point, you had a small swing on the downside. If the RSI moves below 75 and the price also follows it, perhaps the present uptrend might be over. Mind it, only the indicator breaking it will not be sufficient. The price too needs to break it. The ADX, which had flattened up, has started moving for the last 8-10 days and is on a rising spree. Right now it is placed at 50. Well, people may argue that 50 is quite an elevated level. For paucity of time, I'm not going to details of this particular ADX value, which can be a peak. Well, you did say 64 as the peak in March, but by any means that was a black swan event. Neglecting even that 64, we have seen previously that 55 odd levels can be taken as a peaking out level. So as of now, ADX is not giving you any signals that market may be very close to peaking or whatsoever. Rather, I would say it this way, ADX is saying trend is healthy, buy on dips. Prices are saying everything is okay till 13,600 is violated. The weekly RSI does offer us some interesting levels. Well, presently it is placed at 75 and is in an uptrend by any means. There are no signs of divergence in any way. There is an uptrend line in this particular RSI which corresponds to around 65 to 68 levels. It depends when the RSI will hit there, whether will it be next week or after 2 weeks. We should keep a close eye on this particular trend line on RSI for future developments. Mind it, we are talking about weekly scale and not a daily or an hourly. It may take time to unfold itself, so be it. The weekly ADX has certainly turned for the upside and is moving up and currently is at 26 odd levels. Well, weekly ADX is quite a long-term indicator, and I wouldn't, for swing traders, I would say it this way, things might be too late before entering or exiting. All the same, it does give you a clue. Whatever it does, we will be following it up in coming weeks. Here is the hourly chart of Nifty along with RSI and ADX. As you can see from here, the ADX has just started to move up after showing divergence in it. And as of now, it is moving up and has reached levels of 22. It does signify a trending move in the direction of dominant DMI. At present, the dominant DMI is the plus DI. If ADX moves downward again, we might just say, well, the trending move which had been indicated by the ADX on hourly chart is no longer valid. But if it continues to move up, well, I would say a strong trend may develop. Moving on to the derivative segment in the put call ratio, well, Thursday saw a staggering level of 1.89 and thereafter it has cooled down to 1.62. I would still say it this way, well, put call ratio is high. क्या करना है, हाई है मान जाने पड़ेगा. ट्रेंड इज अप, जब तक ऊपर रहेगा भैया शॉर्ट मत कीजिए. And before we move into the open interest section, here is a small video which I would like you to have a look at it. I do have commercial interest in this particular video. Demystifying Candlesticks, a comprehensive course on Japanese candlesticks. It consists of two videos, the first one devoted to nomenclature and examples of same in the stocks and indices. The second video covers blended candles in details with examples of how it can be used effectively by traders. Thorough discussion on gaps and windows has been done for traders to get that extra short. Candlestick rules in support resistance have been discussed along with examples where trading opportunity arises. Candlesticks have been combined with trend lines, moving averages, RSI and ADX to sharpen and plan trading strategies. Do enroll and get started instantly to enrich yourself by demystifying candlesticks from the comfort of home at an extremely reasonable price. Welcome back. Here it is. Nifty moving up. Along with it, the open interest is also moving up. We had flat market for 4-5 days at this juncture. In that time, there was no major increase in open interest. However, we had a breakout on Wednesday, 7% followed by 3% open interest buildup had taken place. You can say, is this 7% or is this 3% being this open interest buildup is at higher level of market? Can it lead to liquidation by the bulls at any shake-off? Well, we can apprehend, but just let's check which is the level below which we should be careful. Yes, sir, the breakout level is just below 13,600. If we have a close below 13,585, we can say that the late bulls had entered into this particular trend, and in that case, some liquidation may come up. But till 13,585 is held by close, well, everything is okay. Moving on to Bank Nifty, I would say it this way, this particular index is much quieter than the main Nifty index. It's more or less flat, and perhaps as of now it appears that it is on a time-bound correction. We are not having any major upside move, any major downside move. All the sell-offs are being bought into, and at the same time it's unable to move further up from here. Well, for me, let's make it simple. Any close below this particular high will terminate the uptrend. This particular level, we had discussed this earlier also, is 13,200, 30,197 to be precise. If we have a move below 30,197, in that case, we may say the intermediate trend may have punctured and we may have some movement on the downside. Till we do not have such thing, we should trade on the upside, we should buy the dips and stick with the trend. The biggest foolhardy thing which you would be doing is going short against this major uptrend. The uptrend punches itself below 30,200. Wait for it to be violated, then only plan short trades. If you are not comfortable at higher level, so be it. But still, I would say wait. इंतजार कीजिए. Let's go to the hourly chart of Bank Nifty, and some interesting observations have come up over the week. A major divergence in 60-minute ADX is observed. Whenever such a move happens, generally a bursting up movement is recorded. Obviously, we all know that we have to trade in the direction of the dominant DMI. But if such type of move comes up in the later stages of bull market and the movement is on the upside, you can expect the burst to take place, and thereafter that might be the end of the trend. But if such move comes on the downside, it might be that a major trend change may come up. Well, this I'm talking to you on an hourly basis. So obviously, accordingly, you have to place your trades. Just for the sake of interest among you, let's see what happened to Bank Nifty in the previous occasions when we got a divergence in hourly chart. Let's see. Here it is, the previous occasion. This was a divergence. It started moving up, remained flat, and then again moved up. In the process, what it did? Well, because of this particular spike, there was a spike in this MDI also, which we should neglect it. Other than that, we were in a flat terrain, and under such circumstances, perhaps the ADX may have remained flat for some more days. Whatever be the outcome, once the breakout on moving averages came up on the upside, or the PDI MDI again crossed for the positive side, a strong move developed, and in that particular ongoing move, Bank Nifty had moved from 24,500 odd levels to 28,700 odd levels. That's almost 3 to 4,000 points move. Let's check another one. A copybook style divergence is being observed in the month of August. Well, what transpired thereafter? From 22,000, the movement was still till at around 25,200. Well, 3,000 point move. During the bear markets also, I have seen that whenever such a signal comes up in Bank Nifty, we do generally get 3 to 4,000 points move in any one direction, and picking up the direction is quite easy. You have to follow the dominant DMI. Right now, the dominant DMI, well, both are fighting. Let's see which one takes up. Will it be plus DMI? Will it be minus DMI? Either way, we will be getting 3 to 4,000 points move in coming 1 or 2 weeks time. Let's hope you trade in the right direction. So much so for this week. See you again next week. Enjoy your weekend.